Aloha and welcome to Java. Thank you for joining me. It is Friday, thank goodness, February 2nd, 2024. We've got quite a bit to go over today, so let's get right into it. We've got our favorite risk indicator, the MMRI, right now, fell below 250, currently to 48.6. We're still in high territory, but that risk came down. And what happened with that is it's allowing the markets to rally. So we've got lower VIX, that's the fear indicator, volatility index. We've got the relative strength of the dollar becoming weaker, as well as the 10-year yield coming down. So as the dollar loses its purchasing power, everything else rises in price, basically inflation, including stocks. So we've got a green market and the futures in agreement. So at the moment, the sentiment is a bullish open with, I think, a volatile afternoon. It's Friday, options expiry. So green to the open and then some chop later this afternoon. We're watching in our calendar. The main thing this morning is the employment numbers. So higher unemployment will give the market a boost. We've got companies leaning towards layoffs, talking about leaner operations and heading towards efficiency, etc. So this prior to market open non-farm payrolls and unemployment rate. So with that, we've got Meta and Amazon surging by $272 billion as cost cuts, quote unquote cost cuts. A lot of that is they cut labor. So more job losses, tens of thousands facing job cuts 2024. And this is all by design. So Federal Reserve Jerome Powell said the labor market is still strong in the press conference, saying it's getting back into balance and that's what we want to see. So literally he's calling for more unemployment. Higher unemployment leads to higher homelessness, but that's what brings the prices down when people can't spend. So the release of the monthly jobs report this morning, they are forecasting 185,000 jobs. This is a net loss. So with the markets going a little further, Meta, Amazon smashing their earnings, their stocks surge, but they're still cutting their employment. We've got Meta is announcing dividends and also cutting jobs. So US jobs report to show slower hiring, and this is what they're admitting. So it's much, much deeper than what they're saying as normal. So going on to the small regional banks, bracing for final trading session, this is basically saying they've got more pain to come, which I agree. There is more pain in the smaller and regional banks because they're either going to be bought out, merged, or they were set up to fail in the first place to take on a lot of these riskier assets. So the larger banks don't have to take them. It's a way that they can wash all of these loans, so to speak, and do some legal money laundering for the larger banks. However, for today, I do expect a bit of recovery, is what is shown in the probabilities. So this is not financial advice. However, take caution if you're shorting these stocks today, particularly day traders. Short term, I do see more probability for recovery for these today before they continue. So with the job losses, this came out, which is a bit interesting, but we're speaking about middle and higher management because these are higher costs for the companies. So remote workers and middle managers are most likely to go during layoff season, as experts are saying. Well, I'm no expert, but we could see this coming. A couple of weeks ago, we were talking about this. Something else we were talking about back when this started, when they first started having the issues over in the Red Sea, is about the increased cost and inflation that it would cause. So, aside from the supply disruptions and the increased time to get goods to market, they're saying now clothes, furniture, and appliances about to cost more. And this is all because of this going on. On the other side, there is also still the Panama Canal issues of getting through there. So back when this started, we knew that would be the effect of that. Right now, they're finally starting to queue in. So we also had, with oil, ExxonMobil and Chevron, second largest annual profits in a decade. So oil going up, they're still talking about cutting their labor, but they have huge profits, and uh, this is inflationary actually in the long run because they're going to keep these prices up. They're talking about a drop in demand, but we're not seeing that yet, and oil is up this morning. So in the real economy, we're going to move to real estate and housing. So these are the first signs of what they're calling sticky inflation. Housing prices could massively plunge under a new property tax proposal. So while that is regional at the moment, I expect that to spread because with the increase in home prices, that increases the property taxes, especially as there are sales. So we've got this story coming out of Florida in particular. They're talking about their insurance costs, home insurance costs. So we've been speaking about that for about the past week. So this is talking about it forcing out seniors, and this plays into total cost for housing and why it's becoming so unaffordable, because it's no longer just the loan or the price of the home, but now you've got property taxes that are doubling and tripling. You've got insurance that is doubling and tripling, and also HOAs, which stands for homeowner associations. So those are basically local government fees that they're doing. Whether if you live in HOA, you would know it, but if you don't, look into those prior to purchasing something and see what the costs are. So with the surging home insurance costs, we've got seniors in Florida no longer can afford it. So I think there's going to be a large housing crush in certain areas of Florida. They're talking about the insurance also just going to ridiculous rates. All of the disasters that we've been talking about, hurricanes and things that have caused issues, they are spreading this risk to everybody so everyone will pay for it. So among this is over in the UK, but they're talking about tax bills and mortgage paying increase, the need for short-term finance along, this is the upper class. So speaking with pawnbrokers, they're talking about major increase in Rolex and high-end luxury goods. They had a Banksy um, work of art that are basically ending up in pawn shops. They can get short-term lending to pay their mortgages. This is not really related. It is real estate, but this was a story about basically money laundering. So from a Chinese investor that they had quote unquote caught from money laundering trying to purchase a mansion in the UK. So they seized the $1.7 billion in Bitcoin that they had. So why I'm bringing this up is not about the money laundering, but where does that Bitcoin end up? It's in the government's hands. And to me, this is a cover story of how they have attained this Bitcoin because they've been purchasing and holding this for a long time. And I think that they're just trying to kind of wash this as it is increasing in asset value. They don't want anybody to know that they have actually purchased it, how they have acquired it, or that you should probably be buying the same thing as well as an asset that they cannot control. So moving forward, we've got a couple of stories. So all of this war is highly inflationary. We've talked about this before, but if you're new here, we've got the United States Air Force awarded Raytheon, their stock ticker is RTX, with a $340 million contract. This is new. So they've got a new missile. It's an air to surface. They're calling it the Stormbreaker. This is direct from their site. So network enabled, so it's a smart weapon, can engage moving targets in all weather conditions using multi-effects warhead and a tri-mode seeker. So $340 million now going more towards military spending that will boost United States GDP. So the language, as I've been pointing out, is more important than actually what the story is. So the Biden administration preparing to retaliate for a drone strike by Iranian-backed militias. The point here is we want to go to war with Iran soon. Why? Because they've got quite a bit going on, in short. So they are going into industrial energy projects, and they're growing. Their growth is tremendous. They have become nuclear power, basically. Southern Iran is now uh, getting into these larger projects, and their GDP is growing. The IMF is even recognizing them for this now. So back to the real war front, we've got North Korea launching more cruise missiles, talking about their capabilities. He's a bit of a loose cannon, but we've got Russia actually keeping them in check. So I've got a couple of lava updates I would like to just bring up prior to letting you go. The CIA staffer behind WikiLeaks, hacking revelations. So he gets 40 years for letting go what the CIA was spying on US citizens. So this is the consequence for doing and saying and going against what they say. So anytime you speak the truth or go against something, the narrative, you have to understand, and I understand this very clearly, what the possible consequences could be. One last story. I think it's kind of cute on the surface. The man is using ChatGPT to find his wife, basically going through dating sites, and he coded this program. But really, what I want to bring up is this last part. He says, I gave ChatGPT information how I usually communicate. At first, there were problems because it didn't know me well, would write some nonsense. But later, I trained it to such an extent that it began to interact with girls just like I do. Unquote. So the programmer also added that it started more than 5,000 conversations, and he's admitting that he had it trained to react with these people just as he did. He told her later on that he did use artificial intelligence, that it was not him speaking with her initially, but the implications of this, of who you could be talking with and who you think you're texting, you never know. So it's advancing at a rapid rate. I just want to bring that out. So if there is anything in this that you did indeed like, please hit that like. Thank you kindly for joining me. Until I see you again, my friends, stay free.